Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
All right, good evening, everyone. Hello, today is February 20th, Friday. First, let's check if you can hear me and see the video clearly. If both the audio and video are working fine, please type a 1 in the chat. If everything is normal with the sound and video, just leave a 1 for me in the live chat. All right, good evening, everyone. Hello, good evening to you all. Okay, let's first check the audio and video. If everything is working fine, please type a 1 or a 2 in the chat. Just give me a 1 in the chat room. If the sound is working properly, then we can get ready to start the live stream. Okay, I see everyone. Please pay attention. All right, everyone, Happy New Year. Happy New Year. I also need to turn on the related video. Give me a moment, just a second. Oh, dear. All right, okay. As everyone comes online, good evening to you all. All right, let me slowly start up the content for this live stream. Okay, your audio seems to be working fine, so let's greet everyone. I just saw Hui Huan Huan, good evening, and also Erwin 10, good evening, and Mei Daitzi, Flying Fish, and who else is this? Who else is here? Oh, Franklin, good evening. And 6, yes, C2P28, good evening. And Water, is Water here too? Good evening. Looks like Mr. Lee from Taichung is here, good evening, good evening. SY Lu, good evening, and maybe Thix, good evening. HUNGCI, good evening, good evening. Hello, okay. All right, everyone, let's have fun. Hello, everyone, the video looks normal, no issues. Brother Cruz, good evening. Today is the 4th day of the Lunar New Year. Teacher Jiang is here online to serve everyone. After almost, should be about 6 or 7 days of vacation. Hey, is that Linlin Mengshuan? Good evening, good evening, good evening. Today the holiday goes all the way to the 4th day of the New Year. I wonder how everyone has been these past few days. Actually, I'm still technically on vacation, but I still have to prepare some materials for the live stream. But what can you do? Otherwise, I'd really like to keep on vacationing. From New Year's Eve on February 16th until now, we've already had about 5 or 6 days off. Wishing you safety, success, and prosperity. Today is the 4th day of the Lunar New Year, and tradition says we welcome the gods today, especially the kitchen god. Never heard of this custom? As the kitchen deity, you welcome him back with sweets. Since he loves sweets, he'll put in a good word for you. And I remember that tomorrow, the 5th day of the Lunar New Year, is when people worship the god of wealth. Some people will go to the temple of the god of wealth to pray. So no matter what religion you follow, it's all the same. This year is the year of the horse. I wish everyone wealth and prosperity. May gold and silver flow your way, and may you be healthy, safe, and joyful. All right, if everyone can hear and see me clearly, then let's get started with today's live stream. Okay, let's begin today's live stream. Of course, today's focus for investors is... Let me start by chatting with everyone a bit. From Lunar New Year's Eve on February 16th up until now, are there any important or major updates from the US or international stock markets? I'll give everyone a summary, including economic data and news from both global and local markets. I'll briefly go over some of the more important things and give you a comprehensive summary. This should help everyone, after the holiday break over the next couple of days, to at least have a clearer picture when facing the new market trends or investment directions next Monday. That way, you won't feel like you missed out on any major or minor events during the break. Also, for those welcoming the God of Wealth for the first time tonight, good evening. In addition, when it comes to the industry side of things, I'll also be sharing updates related to NVIDIA and Meta. If time permits, I'll chat a bit more with everyone. Since it's the New Year holiday, I hope everyone can just relax, keep an eye on the market, and learn something new if possible. I'll do my best to share as much as I can with you all. So if we have enough time today, I'll talk to everyone about the Granville's 8 rules. These are the 8 rules, 4 for buying and 4 for selling, and I'll explain how to use them when analyzing the market, especially for identifying buy and sell points using moving averages. In addition, I'll tie this in with what I often do on the show, where we frequently look at candlestick charts, indices, or individual stocks, and usually overlay 2 moving averages, typically the monthly and quarterly moving averages. Now, these 2 moving averages actually extend from Granville's 8 rules to what's known as the Dongfang line strategy. Some of you might not have heard of the Dongfang line strategy, but that's okay. If we have time today, I'll teach everyone how to use these related tools. When we analyze the market, whether it's in our English group in the morning or on related shows, we always put these 2 lines, the monthly and quarterly moving averages, on the candlestick charts. So how exactly do you use them? How do you combine them with Granville's 8 rules? Today, I'll break it all down for you one by one. Of course, first of all, Hey everyone, good evening, Happy New Year, Happy New Year. Today is the 4th day of the Lunar New Year. At 9:30 tonight, there will be some important economic data released, so let's preview that first. Later, at 9:30, I'll walk everyone through it. The first is the initial annualized GDP growth rate for the 4th quarter in the US. The previous value was 4.4%, the expected value is 3%, and Pengo's forecast is 2.8%. No matter what this data turns out to be, whether it ends up being higher or lower than expected, we'll update everyone at 9:30. Overall, looking at a lot of the current economic data, what we're seeing is at most a cooling off. Some figures are even higher than expected. Many data points are coming in above expectations. And for those that are weaker, they're not showing signs of recession. At most, it's just a slight cooling. So, as things stand, the US economy is not in a recession. Let me remind everyone again, right now the US economy is not heading into a recession. Thanks to Panvilla for the reminder. At most, it's the job market that's showing signs of cooling off. The job market is tending toward cooling. As for inflation, it's still pretty sticky. According to some Federal Reserve officials, inflation remains quite persistent, so they're also hesitant to make any moves. They're not going to recklessly keep slashing interest rates in a big way. So at this stage, the economic data and industry news are basically pointing in this direction. The economy is not in a recession, but the job market is a bit lukewarm. That's about it. Also, the preliminary figure for US personal consumption expenditures in the 4th quarter will be released at 9:30 p.m. The previous value was 3.5%, and it's expected to drop to 2.4%. In addition, the core PCE for the 4th quarter will also be released at 9:30 p.m. The previous value was 2.9, and the expectation is 2.6. Right now, it doesn't look like inflation is surging, and inflation isn't wildly out of control either, so there's no need for everyone to worry too much. Alright, let's wrap up for tonight. Also, regarding the monthly rate of personal spending for December, the previous value was 0.5%. The expectation is 0.4%, and Bloomberg's estimate is 0.3%. So the most important thing tonight at 9:30 p.m., aside from data like the US Q4 GDP, is the December PCE and core PCE data. These are very important economic indicators that the Federal Reserve closely watches to monitor inflation. For the monthly PCE rate, the previous value was 0.2%, and it's expected to rise slightly to 0.3%. The annual rate is 2.8%, with both the forecast and the previous value being the same, both at 2.8%. As for the core value, now we've talked about this before, the core value refers to the figure after excluding food and energy, which are more volatile items, so it's basically the pure chicken soup version of inflation. After removing these two components, the core PCE monthly rate currently has a previous value of 0.6%, and the forecast is 0.3%. As for the core annual rate, the previous value was 2.8%, and this time the forecast has slightly increased to 2.9%. There are actually a lot of data points, more than a dozen in total. Anyway, just take a look if you have time. If you don't, that's fine too. Next week, I'll be doing a live stream again, and I'll go over everything with you all then. Also, at 10:45 p.m., there will be more data released. Oh, this is the US&P Manufacturing and Services PMI for February. For the manufacturing PMI, the previous value is 52 and the forecast is 52.6. As for the services data, of course, when it comes to US reference data, the services numbers are often considered more important than those for manufacturing. Because in the makeup of the US economy, the service sector accounts for as much as 60% to over 70%. So when we look at these economic data, especially things like the PMI, the Purchasing Managers Index, the services PMI is usually considered slightly more important than the manufacturing PMI. So the previous services PMI was 52.7, and the forecast is 53. What's the date? It's night, and I'm Louis Yang. Happy Lunar New Year. It's day 4, and since tomorrow we welcome the God of Wealth, I hope you all get rich. Also, more data drops at 11 tonight. Tonight, there really is a ton of data, maybe because the US is also about to welcome the God of Wealth, so there's a whole bunch of data coming out tonight. At 11 p.m., there's also the University of Michigan's February Consumer Sentiment Index. The previous value and the forecast are both 57.3. As for the 1-year and 5-year inflation expectations, we can see the data for both periods. The 1-year expectation dropped to 3.55%, and the 5-year expectation dropped to about 3.4%. So actually, from all this data, whether it's the monthly and yearly PCE numbers we just talked about, or the 1-year and 5-year inflation expectations for February we just mentioned, actually, all of them clearly show that the market right now doesn't feel like inflation is out of control. At most, it's just that it's gradually coming down from 6%, 5%, now to around 3%. So based on the direction these numbers are heading, we can reasonably predict that in the second half of this year, whether it's the CPI, PCE, or PPI in the US, they're all likely to keep cooling off from their previous highs. Of course, as inflation continues to cool, it will also be favorable for the Federal Reserve to cut interest rates in the second half of the year. It's unlikely they'll aggressively cut rates in the first half, mainly because, first, Fed Chair Powell hasn't stepped down yet. Second, I'll share with you in a bit some of the comments made by many officials this past week. They've already hinted at this. Before June of this year, before Powell steps down, the Fed is likely to remain cautious, take a wait-and-see approach, or even keep things unchanged. You'll understand why once you hear what the officials have been saying. So, the more likely window for rate cuts will be after June, once the new Fed chair takes office, and before the November election. That's when there's a better chance for rate cuts. Now, aside from the economic data, we also need to pay attention to what the officials are saying. Why do I emphasize the officials' comments? Some signs have emerged that actually lower the chances of a rate cut in the first half of this year. Why is that? First, let's take a look. This week, if you've been paying attention, the Fed released the minutes from their meeting. According to the minutes, most officials support keeping interest rates unchanged, while some officials support a rate cut, but only if inflation comes down first. Some officials, on the other hand, believe that if inflation remains high, there should be room left for a rate hike. So overall, the Fed minutes basically show a 50-50 split. Some are in favor, some support a rate cut if inflation drops, but if inflation doesn't go down, they don't support it. Those who don't support it say the Fed should leave room for a rate hike. So right now, it looks like things are pretty tangled, with the opinions basically split down the middle. Half are in favor of cutting rates, while the other half want to keep things unchanged, or even keep the option open to raise rates if needed. So it's basically a 50-50 split. That's why from the Fed minutes, we can generally see the officials' positions. In fact, both camps are basically holding steady and haven't changed their stance. Now, another interesting thing happened just yesterday. Yesterday, Trump's main guy, the official from the so-called Big Brother faction, Milan, who was appointed by Trump as a Fed governor, well, this Big Brother official is pretty interesting. Back in December last year, he kept supporting rate cuts, even saying he wanted to cut rates by 50 basis points or even by 1%. Trump said a 1% rate cut was needed, and every time there was a meeting, every time there was a meeting, he almost always supported rate cuts, cutting by 50 basis points, which is a 0.5% decrease. But in his speech yesterday, he said, "So what do the latest economic data show? Right now, the job market is actually exceeding expectations. For example, yesterday we saw that the number of people filing for unemployment benefits was actually lower than the market expected. Not as many people as imagined went to claim unemployment." So according to the latest data he mentioned, employment is above expectations and inflation in goods is even more stubborn. That's why he no longer believes the Fed should make large rate cuts this year like they did last year. So it's reasonable for everyone to infer that even Milan, who is a major dove, is now saying he doesn't think there needs to be a big rate cut this year. In other words, I think it's reasonable to estimate that this year, a rate cut of about 25 to 50 basis points is probably the most we can expect. Also, there's another piece of information from a more high-level perspective that I still want to share with everyone. From our live stream before the Lunar New Year, up until now, you've probably listened to a lot of live streams or seen a lot of news online during this period. Before the Lunar New Year, during our live stream, we also reminded everyone that since the market is currently at historical highs, you really need to stick to some principles. When the market is high, it's a good idea to take some profits, close out some of your long positions when prices are up, and then look for opportunities if there's a pullback. Buy low and sell high. Everyone knows this, but most fail. Why? Because everyone expects higher peaks. In reality, every time the market hits a new high, it often pulls back. In the first quarter market, it's better for everyone to keep a cautious mindset when facing the current market. Right now, the index hasn't turned bearish. It's not a bear market. But does that mean it'll just keep going up and up forever? Not necessarily. The safer way to play it is to expect that every time the market hits a new high, it'll pull back. So during each of these cycles where it breaks a new high and then pulls back, you need to stick to the principle of buying low and selling high when you trade. Take Bank of America Securities, for example. Their strategist, Michael Hartnett, said that the current overweight position in stocks has reached its highest point since December 2024. Plus, there's a lot of optimism in the air, and all these signals are basically telling everyone that stocks might be overvalued and it could be time to sell. So he's also reminding everyone to keep a cautious mindset at these high levels. He also mentioned that right now, Wall Street is shifting from US stock-related products toward emerging markets like Korean and Taiwanese stocks, among others. These emerging markets and even European stocks have been performing really strongly lately. In the short term, European stocks have actually outperformed US stocks. At the same time, they're avoiding Japanese stocks. So he's saying that these major stock markets are all worth considering as references. In other words, don't just focus on one area or put all your eggs in one basket. You don't necessarily have to buy US stocks or get involved with them. In fact, in the first quarter, a lot of US companies are starting to see pullbacks and corrections after big gains, especially AI stocks. We'll talk about a few of those AI stocks later. It's not that they're entering a bear market, but they are definitely going through a correction after significant gains. During this correction phase, you'll notice that smart money is moving. Where is it going? It's flowing into Asian markets, emerging markets, and even European stocks as alternatives. So this is Bank of America's strategy, and it's something to keep in mind. Now, let's look at the 10-year government bond yield. As for the 10-year yield, it's still holding at around 4.1% right now. The terminal rate is at 3%, and the number of expected rate cuts is still about 2. So looking at this here, in fact, as we mentioned earlier, many official statements have been pretty neutral, leaning toward keeping things unchanged. So in the first half of the year, the hawks and doves are basically split 50-50. But looking at the total number of rate cuts by the end of this year, there's still a good chance we'll see 2 cuts. So that's something we can look forward to. The US dollar index rose slightly today, but remains in a weak, choppy pattern. Until it breaks the 200-day moving average, the index is just seeing minor rebounds and short-term fluctuations. Now, on geopolitics, what happened this week? Every time I see this YYY905, I think it must be a fan of Jolin. Jolin is great too. She's really good at singing and dancing, super talented, right? She's definitely a representative of Taiwan. Alright, let's talk about the geopolitical risks. A few things happened this week. If you look at these events, you'll see that this week was pretty uneventful because that's basically all that happened. For example, Trump said he doesn't just want to set up something called a peace committee to replace the United Nations, right? And then every continent would have its own. Each member who joins has to pay $1 billion US, but of course they don't get to be in charge. There are about a dozen or so members who have joined so far. Now, as for this peace committee he's talking about, it's already received $17 billion in funding. But when I looked at the numbers, I found it pretty funny. Out of the $17 billion, the US itself put in $10 billion, and the other member countries contributed $7 billion. So more than half of the money is basically the US putting in its own money. So what's the purpose of this peace committee? It's supposed to be used for humanitarian aid in Gaza, specifically for the Israel-Hamas situation, basically for humanitarian reconstruction in the Middle East region. As for the current situation, the issue with Hamas is that control hasn't been fully regained yet, but when it comes to the overall geopolitical risks between Israel and Hamas, I don't think it's the biggest factor affecting geopolitical risk at this stage. It's not that big of a deal, so there's no need to pay special attention to it, because in the end, things will settle down. So who's the real geopolitical black swan right now? That's right, it's Iran. It's Iran. We've been talking about Iran since before the new year, and this Iran issue still hasn't been resolved. So what's going on with Iran? Trump said he would give Iran 10 to 15 days to reach a nuclear limitation agreement. If they can't reach an agreement, he just might, carry out a limited-scale strike against Iran. As for this operation, Trump was also pretty vague about it. He said it might be launched within a few days, and it could target just a few military or government facilities, not a full-scale war. So Trump made it very clear, I might do it. Start some small-scale wars, carry out limited strikes on specific Iranian military or nuclear facilities, but he doesn't want it to turn into an all-out scorched earth war. Still, there could be some so-called black swan variables in this situation. This could have a significant impact on the overall market, whether it's the US stock market or international markets, as these uncertainties can be quite influential. So in the coming days, everyone should keep an eye on whether Trump and Iran are in talks. Right now, they're talking, but there's no conclusion yet. A few days ago, there was talk about meeting, was it in Geneva or somewhere else? But even after talking, there still wasn't any resolution. Even so, they're just letting the talks continue. That's the part about Iran, but everyone still needs to be careful about this Black Swan event. Good evening, everyone, and Happy New Year. Now, another issue, another one that just can't seem to get resolved, is the talks between Russia, Ukraine, and the US. As for the Russia-Ukraine situation, it's not that important. Oh, it hasn't been important for years, and even during the new year, it's still not important. Why? Because it's been going on for almost 4 years now, and that's just how it is. There's really nothing new, nothing novel about it. As for the three-way talks between Russia, Ukraine, and the US, they were held in Geneva a few days ago, but no agreements were signed. Since no agreement was signed, just be aware that Russia mentioned new talks soon, but we'll wait and see. This stalemate will likely drag on without major changes. Regarding crude oil, prices recently held the 200-day moving average near $62 and climbed to $67. A big reason for this is there might be some new military developments between Iran and the US, and right now it's still a big mess that hasn't been resolved. So the market is worried. If Trump can't reach an agreement in the next 10 to 15 days, could it really lead to another war? That's why crude oil prices have been getting restless lately, rising from 62 to 67. Of course, on the flip side, if after 10 to 15 days, Iran is willing to compromise and give Trump a bit more face, maybe they'll say, all right, let's keep talking. Let's continue the negotiations. In that case, this rebound in crude oil prices might just be a temporary reaction to the news, because prices could drop back down again. That kind of situation could happen. So when it comes to geopolitical risks, whether it's before the new year, during the holiday, or even after, we think that right now, geopolitical risks, Ukraine matters even less. The main variable is just keeping an eye on Iran. That's enough. Everything else is fine. Just remember, Iran is the bigger wild card. That's what to watch. Now, moving on, let's take a look at some economic data. In a bit, at 9:30, we'll walk everyone through some of the US's fourth quarter numbers like GDP and core PCE. Then, after 10 o'clock tonight, there will be more data coming out, like PCE numbers, University of Michigan data, and so on. If you have time, just keep an eye on those. And next week, just giving everyone a heads up, because next week, it's me again, live. After the New Year holiday, we'll have live streams every day up until February 28th. On February 28th, the Taiwan stock market will be closed, but our Qingying evening live stream will go on as usual. So on the 28th, I'll still be online to chat with everyone. Basically, before and after the New Year, I'll be here live with you all. Next week, too, Teacher Jiang will be here to analyze things with everyone. Now, let's give you a preview of the earnings reports. Next week's earnings reports, around February 24th, so next Tuesday, February 20th, that's when Home Depot will release its earnings. Then on the 25th, we have HP and Warner Brothers. If there's time, next week I'll chat with everyone about what's going on with Warner Brothers. You know, previously, both Netflix and Paramount were trying to court Warner Brothers. Both companies wanted to win over Warner Brothers. So how far has that situation progressed now? So next week, I'll update everyone on the progress and also talk about Warner Brothers' earnings report. But most importantly, the biggest earnings report next week will be from the leader in AI, NVIDIA, which will announce its results in the early morning of the 26th. Also, CRN will release its earnings on the 26th as well. On the 27th, there's Dell, and on the 28th, the last day, Warren Buffett's Berkshire Hathaway will announce its earnings. As for earnings reports related to March, I'll give everyone a preview when the time comes. Anyway, companies like Broadcom, Costco, Medtronic, and Oracle will all release their latest earnings in March. So for next week's earnings and so on, we'll keep tracking them in next week's live stream. So there's no need to worry. This week, it's pretty much all quiet on the Western Front. There aren't any major earnings reports these days. The important ones will be coming next week. What's more important for everyone is the 26th. Early morning on the 26th, NVIDIA will announce its latest quarterly earnings. So speaking of earnings, as for news from the industry supply chain, let's talk a bit about this week. There were still some things happening. Even though we were celebrating Lunar New Year here in Taiwan, I was still keeping up with the news every day, checking out what's going on in the financial world. Sometimes I'd be eating reunion dinner with family, and after finishing up and heading home, I'd check the news and look at some data. On the first day of the new year, after getting a good night's sleep, I'd check the numbers again. On the second day of the new year, people usually visit their mother's family, but I don't have a mother's family to visit. I'm not married, and I haven't married anyone, so there's no in-laws for me. Still, I went out to visit family, walked around the neighborhood with relatives, just strolled around a bit. After that, it was the same routine, checking the markets, looking at some data. So from the first to the fourth day of the new year, I was basically checking data every day, hardly taking any real time off. So what kind of data and industry news do we actually have this week? Good evening and Happy New Year. Let's talk about Meta for a bit. Meta said they want to sign a multi-year agreement with NVIDIA. They mentioned that they plan to buy millions of NVIDIA chips for their AI data centers, including standalone CPUs and systems like Rubin. They also said they plan to build 30 data centers worldwide, with 26 of them in the US. Anyway, they talked about a lot of things. So what about NVIDIA? Before responding to Meta, actually, Meta had considered developing its own chips because constantly buying NVIDIA chips is pretty expensive. If you remember, last year, Meta even wanted to collaborate with Google and buy Google's TPU chips, which caused quite a stir. At that time, when they said they wanted to buy Google's chips, Google's stock went up and NVIDIA's stock dropped because of the news. So in fact, Meta, Facebook, not only wants to develop its own chips and work with Google, but just this week, they also said they'll continue buying related chips from NVIDIA. There's really no other way because NVIDIA's chips are simply the best and most useful, even though the cost is relatively high. Alright, let me remind everyone about this chip buying move. Whether they want to develop their own, buy Google's GPUs, or keep using NVIDIA's, whether it's the Rubin series or Blackwell chips or any other chips, regardless of which chips they use, it doesn't matter. That's just the direction they're heading. They have to keep burning money. They need to keep spending heavily, because only by doing so can they maintain an unbeatable position in the AI field, whether it's building data centers or developing AI itself. But because every investment they make involves massive spending, a while ago, Meta's financial report mentioned this to everyone. This year's capital expenditures are expected to reach nearly $135 billion. Such a huge amount. So right now, what the market is worried about isn't whether these AI companies are doing well or not. What the market is concerned about, and has been since before the new year, is that these companies are drastically increasing their capital spending. Whether these capital expenditures, which are as high as $100 billion or even $200 billion, can actually be recovered effectively and generate positive cash flow and revenue, that's what investors in the market are criticizing, and it's also what everyone in the market is concerned about. These tech giants, whether it's Meta, which plans to invest $135 billion, or Microsoft with about $120 billion, and the biggest one is Google, which says it will invest between $175 billion and $185 billion. But the largest of all is Amazon, which announced it will invest even more. This year, their capex is $200 billion. After the announcement, shares fell for 8 straight days. Investors worry if they'll ever see a return on that spend. This infrastructure cash burn is exactly what's troubling the market. So the reason why the Magnificent Seven stocks have been performing poorly lately is that every single company is significantly increasing their capital expenditures. But is this big increase in capital spending actually good for these companies? Let me tell you. It is good for them. In the long run, it's a positive thing. That's because they have to invest heavily in AI, in building out data centers, including CSP-related areas. They need to make these large investments in order to bring in a lot more cash flow in the future. They have to do this. So looking at the long term, these companies really will get better and better. It's just that in the short term, because of the large amounts of debt, massive spending, and heavy borrowing, a lot of people are worried that they can't see the future right now. But I want to tell everyone, if we look further ahead, AI, at least for now and in the short term, is definitely not a bubble. In the short term, it's not a bubble, and over the next 2 years, the AI sector should still have plenty of room to grow and keep gaining momentum. Right now, it's still sufficient. We really haven't reached bubble territory yet. It's just that in the short term, stock prices are too high and people are worried about overvaluation and that the positive cash flow can't keep up. That's really the main concern. But if we look at it rationally and take the long view, these big companies, because they keep increasing their capital expenditures, will actually benefit in the long run. This benefits these companies. How? It helps them establish a stronger foothold in the AI industry and creates a higher so-called competitive moat. If they don't invest in these costs, if they don't put in this money, then that competitive moat can't keep growing. And if it doesn't get bigger, they won't be able to compete with other countries or other companies, whether that's through cooperation or competition. So in the future, this will include companies like Meta, including companies like Google and like this one as well. Companies like Amazon and so on, these companies will have to bear more and more of these costs in the future, but they have no choice. They have to do it. It's just a short-term shock, so everyone needs to be mentally prepared. In the short term, the more money a company spends, the greater its expenses, and the more pressure it will face. As a result, its stock price will tend to be weaker. That's the short-term situation. Okay, that's the short-term situation. But it's become something they have no choice but to do. If they don't do it, the market will think, oh, you're not making big capital expenditures, so you must not have any orders. But if you do make those investments, the market is worried that after doing so much, you might not be able to make your money back. So whether he does it or not, people will criticize him, but he has to do it because he has to compete with the whole world. So even though Meta says they've signed all kinds of agreements with Nvidia for millions of chips, if we look at Meta's stock price, this neckline right here, it was gained, then lost again, and the price dropped back down. So over the next month or so, keep an eye on this blue neckline and see if it can hold above it again. If it manages to stay above, that would be a good sign for its future development. Okay, so yesterday it went up about 0.24%, but it's still mostly in a consolidation phase, still more of a sideways movement. Even though Meta's performance went up, honestly, I really don't like how fickle our main tech stocks are, but there's nothing we can do. They still have to develop. And, well, Meta also has its own prospects and advantages, which are undeniable. And then Stanley, good evening, 6314, and also, who was it? Jeff asked if I went anywhere for fun. No, this year, basically, I went back to my hometown early. Well, not a year early, just a month early. Actually, last week, before my vacation even started, I already went back to my hometown. This new year, I stayed in Taipei the whole time. I visited friends and relatives to chat, play cards, and eat. A few days ago, right as the holiday started, I even took the train by myself. Some thought I was crazy, all the way to Hualien. Oh, just last week, the weather in Hualien was really nice. It was the Friday before last, and we were already on holiday, so we took the train to Hualien. And what did we do in Hualien? We went to collect rocks. I don't know if any of you have this hobby. For me, I think it started last year. Yeah, last year, or maybe the year before. I suddenly developed this interest in collecting rocks. I have no idea why, but it just happened. So that's why I went all the way to Hualien, to places like Xincheng and Changde by the seaside. We went to collect rocks, but you have to be careful. There are some places in Hualien where you can't just pick up rocks. In some areas, it's actually illegal to collect rocks, like at Sangxitai or Qixiantai. It's against the law to take rocks from those places. So you have to go to spots where it's allowed. There, you can find things like bloodstone or rosestone. My favorite is rosestone, because I think the color is just so beautiful, a soft, pale pink. So last week, when you asked if I went anywhere, I actually went to Hualien to collect rocks. I made a day trip to Hualien just to pick up some rocks, and brought a few back with me. I guess that's a pretty unique hobby of mine. Sometimes it's not even about finding rose stones, though honestly, I do find rose stones pretty often. They're actually pretty beautiful. Sometimes what I really enjoy is the process of picking up rocks. While I'm doing it, my mind just goes blank. It's a way to relax and unwind. And as I'm looking around, I see the East Coast mountain range, the Suha Highway, the Kingshui Cliffs, and the vast Pacific Ocean. The blue sky and the turquoise sea, it's honestly stunning. The mountains in Hualien and Taitung are incredibly tall. Most of them are part of the Central Mountain Range and rise over 2,000 or 3,000 meters. So when I'm over there, when I'm picking up rocks, honestly, I just really enjoy that relaxed feeling. Yeah, picking up rocks is a process, and during that process, I feel relaxed. I just like that feeling, so I wanted to share it with everyone. Everyone has different interests, you know? And then someone else, hey, this is WTF on 79. Good evening, good evening. What was that? Excuse me, if someone from Hong Kong doesn't have a Taiwan residence permit, can they buy stocks in Taiwan? I'm not sure if that's possible or not. This is probably something a broker would know better. For example, Taiwanese people can buy Hong Kong stocks, mainland Chinese stocks, or US stocks through a sub-brokerage account, through a broker's sub-brokerage account. But as for whether someone from Hong Kong without Taiwan residency can buy Taiwanese stocks, I'm really not sure about that. You'd probably have to ask a broker or a brokerage firm. They'd know more about it. They can give you a more in-depth explanation about what methods are available, how you can buy, and how you can open an account. I'm guessing it should be possible, but I really don't know the exact way. There are a lot of stones in the garden. Whether you'll find gold among them, maybe there isn't any gold at all. Yeah, it's best not to come on the same day. Of course, it's a bit tiring. I'm a bit tired myself. But anyway, during the new year, everyone should try to get out and about. After you've recharged and rested, next week, we'll continue to track the market with everyone. Next week, anyway, we'll be back to our regular routine. So these few days, just relax as much as you can. That's the right thing to do. Just relax. All right, as we're talking, it's 9:30, so let's first take a look at the economic data. Let's check it out. Hey, Zhao, good evening, good evening. Okay, economic data. Let's look at the economic data. This is pretty standard. Economic data? There's been a whole bunch of data just released, so let me walk everyone through it. Let's review the US GDP for the fourth quarter. The annualized preliminary figure just released is 1.4%, which is lower than expected. 1.4% versus the expected 3%. It's also lower than the previous value of 4.4%. As for personal consumption, it came in at 2.4%, which is in line with expectations. Regarding the core PCE for the fourth quarter, which is more closely related to inflation, it reached 2.7%, slightly above the expected 2.6%. However, compared to the previous figure of 2.9%, it actually dropped by 0.22%. Now, looking at the US personal spending month over month for December, it came in at 0.4%, which met expectations, although it was slightly lower than the previous value of 0.5%. Most importantly, for the PCE, the monthly PCE rate was 0.4%. It was slightly higher than expected. The forecast was only 0.3%. As for the annual PCE, it edged up to 2.9%, which was higher than both the expectation and the previous value. Now, if we exclude food and energy for a more core measure, the core PCE monthly rate for December, which is a metric the Federal Reserve pays closer attention to, came in at 0.4%. It was higher than expected and also higher than the previous value. As for the annual core PCE, it jumped to 3%, surpassing the expected 2.9% and the previous figure of 2.8%. So, looking at the recent economic data overall, we can only say that inflation numbers were all slightly above expectations and previous values, which basically confirms it. Federal Reserve officials have also just reminded everyone of this. Right now, inflation is pretty much stuck. It's kind of rigid and hasn't dropped significantly. Maybe we'll only see it start to come down in the second half of the year, since it's still being affected, at least to some extent, by tariffs and such. So all these recent data points, there are about 7 or 8 of them in total. Looking at the inflation numbers, each and every one of them, they're showing slight upticks. These small increases in inflation, of course, mean that the Fed doesn't need to rush into cutting interest rates. Okay, let me say this again. The data that was just released at 9:30, the inflation-related numbers, whether it's the fourth quarter core PCE or the core PCE's monthly and yearly rates, are all quite a bit higher than expected, but the extent to which they're higher is really only about 0.1% more, or maybe 0.1% or 0.2% higher than the previous value. So we can only say that inflation has edged up slightly, but it's not out of control by any means. And in terms of economic performance, when it comes to personal spending or the GDP for the fourth quarter, most of the fourth quarter's personal consumption expenditures were in line with expectations. Only the fourth quarter GDP was significantly lower than what the market expected. So right now, it looks like the economy is slowing down a bit, but it's not heading into a major recession. Inflation's slightly rising, but it's not out of control. So as we just discussed, that's the interpretation. Just to make sure that's clear, this means that the Federal Reserve isn't in a hurry to cut interest rates at the moment. That's pretty much it. So looking at tonight's economic data, I think the impact on the US stock market will be more of a fluctuation. Yeah, the effect on US stocks is likely to be choppy. It's not completely one-sided with all bearish signals, but it's also not all bullish either. So I think today will probably be more of a slight up or down, a kind of choppy market. Okay, so that's a quick summary of the PCE and the fourth quarter GDP data that just came out at 9:30. All right, so keep tracking the reports and so on. Next week I'll be doing a live stream, right? Yeah, next week I'll be live streaming, recording the live stream on Monday. We'll be streaming all the way through the 2/28 holiday, just streaming and then keep streaming. So who was it again? People ask about my asset allocation. I don't touch futures or options because the volatility is too high. Currently, I only invest in Taiwan and US stocks. My Taiwan holdings are all in ETFs, making up 20% of my portfolio, while US stocks account for about 60 to 70%. The remaining portion I keep as cash, about 20%. So that's my asset allocation. 20% in Taiwan stocks, 60% in US stocks, and about 20% in cash. You can use this as a reference if you'd like. All right, thank you to Jeff Lin for your response. Someone also helped answer whether you need a Taiwan residence permit to buy things like stocks in the Taiwan market and so on. You can look into that. If you don't really understand the specific rules, that's okay. Besides checking the relevant regulations, you can also ask your brokerage if they offer these services. For example, does Capital Securities provide related services? They probably know more about these systems. All right, let me add some economic data for everyone. Now let's go back and look at another piece of news, which is about NVIDIA. NVIDIA is very important. It's a leader in AI. This week, NVIDIA's Jensen Huang also made some remarks. So what did he say this week? In addition to mentioning that NVIDIA will maintain its multi-year partnership with Meta, involving the purchase and shipment of millions of chips, Jensen Huang also said that this year's GTC conference is scheduled to be held from March 16th to 19th in California. So everyone remember those dates, March 16th to 19th. Oh, and that week, I think I'll be doing a live stream too. Maybe I'll be live streaming, maybe not. Anyway, whatever. Just remember, March 16th to 19th in California. Keep an eye on the GTC conference and see if Jensen Huang mentions anything relevant. Someone said this is an AI-generated response, right? Okay, no problem. If you can't find the related information to post, you might just need to double-check from multiple sources to make sure the info is accurate. There's a lot of that with AI these days. AI-generated stuff can be useful for reference, but whether it's 100% accurate, that's not guaranteed. Okay, so it's still safer to back things up with data and information from multiple sources. That way you have supporting evidence and you won't end up misinterpreting things if you come across incorrect info. Just make sure to cross-check and supplement with more research. Alright, moving on. Jensen Huang said that at this year's GDC in March, he'll be launching a brand new chip, but he didn't share any details, no specifics at all. Meanwhile, the market is speculating whether it's going to be the next generation Feynman chip, the Hopper-Feynman architecture chip. This Rubin successor might launch in 2028. Will they announce the Feynman chip now? Probably not at this GDC. It's too soon. At most, we might see an advanced Rubin version. But do you think they'll bring up the Feynman chip from 2018 with its 1.6 nanometer process and maybe even talk about using silicon photonics technology? Silicon photonics has been a hot topic lately, especially with some of these new chips. It's possible that NVIDIA's new chips might use this silicon photonics technology as well. So you should pay attention to some of those stocks in the US, like LITE, ticker symbol LIT. In Taiwan, there might be some companies related to silicon photonics as well, like Lianzhan, Huaxingguang, Shanseng, or maybe Polaway, and so on. Just keep an eye on those few companies because silicon photonics technology might be used in the new generation of chips. But if you're asking whether the Feynman chip, which is supposed to launch in 2028, could actually come out as early as March, I don't think that's going to happen so soon. That's because right now, the more popular chips that are still working toward mass production are the Rubin series chips. The Rubin chips haven't even been fully released to the market for mass production yet, nor have they been widely deployed. So to talk about the Feynman chip right now, I think it's probably a bit premature. This kind of speculation is something the market can listen to, but just take it with a grain of salt. I'll just listen and leave it at that. Now, regarding the question from Claire about where the briefing is and how long it will be available, and whether our brokerage sales reps can talk about it, every day before our nightly group live stream, I always give the day's briefing materials to our sales reps. All of our salespeople across the province have them. All the branches across the province have it, so as long as you're a client of Uwanta Securities, you can ask your sales representative for the briefing. The briefing covers the content of our daily sessions, and it's all free. You can just request it. You can review while you watch, and we'll provide all of that for you. Just to add a quick note, both Rubin and Feynman are the names of important scientists. Alright, so for example, Feynman is a very famous physicist, and he even won the Nobel Prize in Physics. So if you have time, you can also look up related information, not just Blackwell, but also Rubin and Feynman. These names are all important, just like Jensen Huang. They look for famous people in the world, like mathematicians, scientists, astronomers, and important figures like Feynman, he's a physicist, to name their chips after. I remember Rubin. I think Rubin was an astronomer, but I'm not sure if Rubin was a woman or not. I can't quite remember. Maybe I forgot. So Rubin seems to be an astronomer. Anyway, aside from the GTC conference from March 10th to 16th, I think another really important thing is that NVIDIA's earnings report will be released on February 26th, so everyone should keep an eye on NVIDIA's earnings report. As for NVIDIA's earnings report, whether it announces good or bad news, the impact will be significant. So looking at the short term, NVIDIA's stock price, yesterday it dipped slightly by 0.04%. We've talked about this before the new year and now. NVIDIA's stock price has been staying within a certain range, and that range hasn't been broken yet. It's basically been a pattern of buying low and selling high. The lower end of the range has been tested about 3 times, and the upper end about 4 times. So you just keep buying low and selling high within that range. It's basically a small range, and the price difference is only about $20. Not much. So when will it break out or fall below this range? I think we'll have a better idea after NVIDIA's earnings report on February 26th. This should be a clearer direction after the earnings report. Before that, just stick to buying low and selling high within this range. The support level is basically around the annual moving average. So yesterday, it dropped by 0.04. I think this week, before the earnings report is released, it should still be trading within this limited range. Alright, so this is to answer and add some more information related to Meta. As for Buffett, let me mention him briefly. Buffett said that in the fourth quarter of last year, he reduced his Apple holdings by about 4.3%. Honestly, that's not a lot. If you look at the data, it seems like it was just over 10 million shares. But right now, his total holdings are still over 200 million shares. So the total market value of his position is still $62 billion, which is pretty high. He also trimmed his position in Bank of America, reducing it by nearly 9%. That's quite a significant cut, almost a tenth. Then there's Chevron, the oil company. He reduced that by 6.6%. The market value of that holding is $2 billion. So I'm sharing this data with everyone as well. I'm providing you with the relevant 13F filings and related reports about these increases and decreases. So all we can say is that for Berkshire, whether it's trimming Apple or Bank of America, increasing Chevron, or even opening a new position in the New York Times, these moves might have a slight impact on the stock prices, but overall the effect isn't significant. So you can just keep an eye on it. As for the reduction in Apple, it's not a big deal this time. Compared to last year, the scale of the reduction is honestly not that large, just 4%, so the impact is pretty minimal. Unlike in 2024 or 2025, when they cut their position by 30 or 40%, the scale back then was much larger. Last quarter, they only cut it by 4%, so it's really no big deal. I'm just checking things out casually. So today, of course, I'll still spend a little time. There's still a bit of time left to talk with everyone about this topic. This is something I promised you all, something I said I'd follow up on, some teaching content. Today, I'll take some time during the new year to talk about the 8 rules of Granville. You all really need to learn this. It's a fundamental tool for analyzing the market. So how do you use Granville's 8 rules? Sometimes when we're looking at candlestick charts, you'll notice that we often put these 2 lines on the chart. Sometimes it's the 20-day moving average, sometimes it's the 50-day moving average. These moving averages, when combined with stock prices, are really useful, but before you can use them effectively, you absolutely need to understand what Granville's 8 rules are. Granville, the person himself, was a very famous American expert in volume and price analysis. His name was Granville. As for how to use what he created, it's actually very simple, so don't overthink it or make it too complicated. Don't make it too complicated, just remember one key phrase. Let's start with the conclusion. Just remember this one key phrase, okay? This isn't something Granville himself told us, but just remember this phrase. When we apply it in practice, just remember when the moving average is trending upward, when the moving average is rising. Every time it pulls back, that's your early buying opportunity. When the moving average starts to curve downward, every rebound is a chance to look for a selling point. Let me say it again. The simple conclusion is when the moving average is going up, like this one here, this dash line, see this dash line circling around? That dash line, the one you see on the screen, that little dash line, that's the moving average. In an uptrend, when the price pulls back to the moving average, you buy. In a downtrend, when the price rebounds to the average, you sell. To remember the 4 buying and selling points, just look at the screen. The first buying point is right here in the lower left. So what kind of buying point is this one in the lower left corner? It's when the moving average, after declining, starts to level off and then begins to curve upward. When the moving average starts to curve up and the stock price breaks above the moving average, when the moving average is curving up and the stock price breaks through it, that's the first buying point. At that time, you can go all in or buy about a quarter or a third, whatever works for you. Just start building your position in batches, buy some shares. Now, what's the second buying point? The second buying point, didn't we just talk about this at the beginning? It's when the moving average is trending upward. When it drops back down to the moving average, that's the second buying point, as long as the moving average is still curving upward. You might ask, how many days should this moving average be? So, how many days should you use for the moving average? If it is US stocks, you can use the monthly moving average or the 20-day moving average. If it is a quarterly moving average, then use the 60-day moving average. If it is the monthly moving average for Taiwan stocks, I would recommend everyone use the 22-day moving average, 22-day MA. If it's the quarterly moving average for Taiwan stocks, use the 60-day MA. As for which time frame to use, you can look at the 30-minute chart. You can also use the 60-minute chart for short-term trades. If you're trading futures, use the 30-minute and 60-minute charts. But if you're doing medium to long-term swing trading, then use the daily and weekly charts, daily K and weekly K. Don't use other time frames. Other time frames don't have much reference value. Don't bother with anything below the 30-minute chart because the price swings are too volatile and your moving averages will lose their focus. Also, don't use time frames that are too long, like the monthly moving average or monthly K-line. The period is just way too long. In that case, using the 20 or 50-day moving averages doesn't really mean much either. So, as I told Belle, let's stick to what's practical. Based on practical experience, the most useful time frames are the 30-minute and 60-minute K-lines, as well as the daily and weekly K-lines. Just remember these 4 time frames. Don't bother with the others. They're not really meaningful, okay? This is the rule we often use in practice. If you just use Granville's method or whatever and ask, teacher, can I use the 25-minute chart? Can I use the 5-minute chart? Can I use the monthly K-line? Go ahead and try them out, and you'll find they're not very useful. They just don't work as well. The 4 time frames I just mentioned are more than enough. They'll make you money. Those 4 are all you need. Alright, so those 4 time frames are enough to make money. Okay, let's move on. Just now, someone asked how to tell if it's a false breakout or a real one. Alright, take a look. What about the second buying point? Let's keep going with this. For the second buying point, isn't it when the price pulls back but the moving average is still trending upward, right? The third buying point, this is what we call a false breakout. Why is the third buying point called a false breakout? Because the core principle in the medium term is that the moving average should be trending upward. The moving average needs to be going up. So when the stock price falls below the moving average, how do you determine if it's a false breakout? How to judge? The key is an upward trending moving average. If today the moving average is flat or down, a break below is a true breakdown. But if the moving average is trending up and the price dips below it, that often turns out to be what's called a false breakdown. Let me add something else. This isn't shown on the screen. Just to supplement, sometimes people will put data up and ask, what exactly is a false breakdown? Sometimes, some people will define it like this. When the stock price falls below the moving average, say for an index, it might drop more than 0.2%, or for an individual stock, it might fall more than 3%. If it closes down more than 3%, at that point it's easier to judge whether it's a real breakdown or a false one. So you can use 2 methods. One is to see if the moving average is trending upward. If the moving average is going up, but the stock price falls below it, usually this third scenario is called a false breakdown, which actually becomes a buying opportunity. So a false breakdown is a buying opportunity. Use 3% for stocks and 2 per mil for indexes as tools. This practical method isn't in textbooks. What's the fourth opportunity? A large negative deviation. So what does it mean when the negative deviation is too large? It means when a stock price keeps dropping and dropping, falling way too much, like, wow, it's dropped a lot, then it's likely to rebound. So when the negative deviation is too large, that becomes the fourth buying opportunity. Now, because our class time is limited today, I might not be able to explain exactly how much positive or negative deviation counts as too much, but you should at least get a basic idea of what deviation means. Deviation rate means that the current stock price is too far from the moving average. Alright, when the current stock price is too far from the moving average, whether it's risen too far or dropped too far, that's called deviation. To put it even more simply, it's just the percentage by which the current stock price differs from the moving average. Deviation rate shows how much the stock price differs from the moving average. When negative deviation is too large, it often signals a potential rebound. The fourth buy signal occurs when the negative deviation is too large. What are the 4 selling points? Let's take a look at the first one. The fifth selling point, since there are a total of 8 major rules, numbers 1 through 4 are buying points and 5 through 8 are selling points. So what is the fifth selling point? It's when the stock price falls below the moving average. When the stock price falls below the moving average and you notice that the moving average, which was previously trending upward, starts to level off, slowly becoming flat, that's a warning sign. It's no longer rising steadily. Instead, it's shifting from an upward trend to a flat one, so you need to pay attention because it could reverse downward at any moment. So when the stock price falls below a flattening moving average, that's the first selling point. That's the first selling point. The second is when the moving average shifts from rising to falling, sloping downward. If the price rebounds to the average but can't break through, that's your second selling point. The third selling point is a false breakout. This happens when the price breaks above the moving average while the average is still curving downward. Finally, the fourth point involves positive deviation. Similar to how a deep drop leads to a bounce, when the price rises too far above the moving average, it's overextended and likely to pull back. What happens when it gets too far away? When it gets too far, naturally there will be a so-called pullback or correction after an excessive rise. So these 8 signals include both buy and sell signals, 4 for buying and 4 for selling. You really need to know how to use them, you really do. But because of time constraints, we can only focus on one key point to compare for everyone. You need to remember this chart, where the buy points are, where the sell points are, and then use it together with the deviation rate. In fact, when it comes to, say, signal number 6, I might even suggest you use the KT indicator as a reference as well. Is that okay? Of course it is. For example, when I look at Granville's 8 rules, I also use the KT indicator and candlestick strategies together. So we can only say that this is just one very useful tool among many. It's also a very important tool, but if you want your buy and sell points, your trend judgments to be even better, if you want your entry and exit points to be more precise, then just like I mentioned earlier, maybe you should use it together with the SI and ACD indicators, the KD indicator, or even candlestick strategies. That way, your stock selection and entry timing will be even more perfect and refined. So this is a simple introduction to Granville's 8 rules for everyone. Remember this chart as well, 4 buy points and 4 sell points, and you need to know how to identify a false breakdown. What is a false breakout? Or you need to be able to determine what counts as a normal or excessive positive or negative divergence. You need to be clear about these buy and sell points, and then take it a step further. Look at this chart. This chart, well, in every one of our presentations, we almost always include these 2 lines. Why? Because beyond the Granville bar law, we take moving averages a step further and integrate them into 5 investment portfolios. You need to remember these 5 trading strategies. You won't find this in textbooks. So, as a special New Year's episode, I'm sharing this with you all today. If you go online, you won't find this in bookstores or even on Google. It's my personal method and doesn't exist anywhere else. This is the 5 major strategies of the East Wind line, which I developed from Granville's 8 rules. Based on some stock trading and practical trading experience, I simplified and combined it into 5 very useful ways to observe trends. I call it the 5 virtue strategy of the East Wind line. This is something I, Teacher Jiang, created myself. Now, why do I say this? Previously, during lectures or when teaching, some students would ask, "Teacher, why do you use the 3 characters for East Wind line?" There's a reason for it. East Wind line, right? Why is that? You know, everyone, because I like reading historical stories, if you look at the Romance of the 3 Kingdoms, in chapters 14 and 49, if you check, you'll see that chapter 49 is about, who was it? Zhu Julang and Zhou Yu, right? The 2 strategists, they were planning to join forces to attack Cao Cao. That was during the Battle of Red Cliffs. Isn't it just like in chapter 49 of the Romance of the 3 Kingdoms, Zhuge Liang tells Zhou Yu, he says, if you want to defeat Lord Cao refers to Cao Cao, if you want to defeat Lord Cao, you must use fire attack. So if you want to fight the Battle of Red Cliffs, you have to use fire to burn the chained ships. That's why, to defeat Cao Cao, you must use a fire attack. And then, everything is ready except for the east wind. That means when everything is prepared, the only thing missing is the east wind. Why do you need the east wind? Because when the east wind comes and you set the fire, the wind direction will be right, and it will burn all of Cao Cao's warships and boats. So that's why we say everything is ready except for the east wind. I use the term east wind line strategy. Why do I call it the east wind line? Because when we're looking at trends, it's really about these 2 moving averages. As long as the direction of these moving averages is correct and you can understand them, then these 5 strategies become simple. If you can grasp these 5 strategies, everything is ready except for the east wind. Once the east wind line appears, your uptrend or downtrend will become very clear. That's why I named it the east wind line. These are the 5 strategies. Using Granville's law, add the 2 moving averages we often discuss for the daily K line and index. With these on your chart, you'll see market trends clearly. It's simple to use. It's the same. For US stocks, you use the 20 and 50 moving averages. For Taiwan stocks, you use the 22 and 60 moving averages. Just use these 2 lines and apply them to the 4 time frames we just talked about. Remember? You can use them on the 30-minute and 60-minute charts for short-term trading. For medium to long-term, look at the daily K line and weekly K line. So these 4 time frames and use these 2 moving averages. Got it? How do you use them? Let me explain. It's simple. When the 22 and 60 moving averages both trend up, stay bullish regardless of the asset. If both lines trend down, switch to a bearish outlook. It's really simple, right? Okay, let's continue. If the 22-day moving average, the short-term one, is trending upward, but the 60-day moving average is trending downward, you should treat that as a rebound within a downtrend. Got it? Okay, you need to understand these combinations. Lastly, if the 22-day moving average is trending downward, but the 60-day moving average below it is starting to trend upward, you can see that as a correction after a strong rally. After the pullback and consolidation, it could reach new highs again. So the interpretation of these two, number 1 and number 4, and number 2 and number 4 is different. The interpretation of number 2 and number 4 is not the same. Finally, let's say you see the 22-day or 60-day moving average. Let's say both the monthly and quarterly moving averages, if both lines are more or less flat. If they're mostly flat, it's a sideways market or consolidation range. So what's your next move? Buy low and sell high. Don't get it wrong. When both lines are flat, don't chase the highs. Absolutely don't chase the highs. When you hit the extremes, you need to be brave and buy, because that's what we call a consolidation range. You can pull up the charts for individual stocks or the index and take a look. You'll find that about 80 to 90% of the time, it fits into these 5 investment combinations. It's not 100%, but about 80 to 90% fall into these 5 categories. They don't go beyond these 5 strategies. As long as you understand these 5 strategies and keep in mind the 4 buy points and 4 sell points from Granville's 8 rules, then just take a simple look at the stocks you're currently holding. Whether it's Taiwanese stocks, US stocks, or indices, you'll pretty much be able to tell whether your current stock or the index is leaning more bullish or bearish. You get it, right? So you really should take a screenshot of this chart, because this is something I can only talk about today during the new year. Normally during our live streams, there's absolutely no time to discuss things like this. We barely have enough time to talk about the market itself. Sometimes, you see, once I start talking, I can go on for almost an hour. Even during New Year's, I talk so long, I'm nearly clocking out. But today, I'll share a bit since students asked about teaching topics. I took extra time to discuss Granville's 8 rules and the 5 Dongfeng line strategies, which are combinations extending from those 8 rules. Keep this in mind for your market analysis in the year of the horse. May it bring you great fortune and wealth. Just note this down, and remember, beyond this portfolio and technical analysis, let's check US stocks before the open. APP is up 5.68% on positive earnings. Comfort Systems USA rose 5.5% pre-market, also on strong reports. Both benefit from good earnings news. Meanwhile, Robinhood, Coinbase, and Bitcoin-related stocks are rebounding after previous declines. In the US pre-market, there are also some smaller gains, around 1.2% to 1.5%. In addition, Google is up 1.2%, and HPE, Hewlett-Packard Enterprise, is also up about 1% pre-market. On the downside, there's Akamai, which is down 11%, and that's also related to disappointing earnings. In addition, companies like Caterpillar, Newmont, and Moderna are also down 3 to 6% in pre-market trading. Others like Oracle and United Health are only down slightly, about 0.3%. Alright, that's it. You're welcome. No need to be polite, everyone. No need to be polite. And Huang Chen, YouTube, no need to be polite. Anyway, just keep learning. If you're learning Chinese, just do your best. Whenever we have time, we'll talk about it. Mr. Lee from Taitung, you don't need to be polite either. Basically, everyone just shares with each other. But I still want to bring this up with everyone. This thing is really, everyone should treat these tools as just that, tools. They're not going to be 100% correct or 100% accurate, but 70 or 80% of the time, they'll help you spot trends and identify buy and sell points. They're not perfect, but as you use them more, you'll figure out which tools you use most often. For example, we might look at indicators like MACD, or maybe something like DMI, and so on. These kinds of indicators are all useful. You need to internalize them into a set of tools that you personally use most often. Technical tools or indicators that you feel are more accurate for analyzing the market are fine to use, but does that mean that every tool is right for everyone? The answer is no. Every tool has its own characteristics and is suited to certain types of stocks. The right index or tool is always relative. It's never going to be 100% perfect. So you really need to find a tool that feels the most intuitive and accurate for you personally. This all requires constant trial and error, ongoing practice, tweaking your parameters, and optimizing your tools. Everyone uses them differently, and some people even have their own preferences. Some people like to trade futures options. For that, the indicators they look at might be completely different. They might need to react much faster with higher frequency, so they might not use moving averages at all. Instead, they might have to use KT indicators, DNI, or something else entirely. But there are also things like standard deviation and a whole bunch of other stuff. So everyone should try out different things. Really, try as much as you can. Remember, once you find a tool that works for you, just keep using it. Keep repeating the process. When it comes to actually putting it into practice, you just have to do it. Don't hesitate. Everyone really needs to develop this habit. Once you've already simulated a model yourself and that model's accuracy is as high as 80%, but when it comes time to actually use it in real trading, it gives you a buy signal, and yet you're still hesitating and second guessing yourself. Then you might as well not use it, right? When it gives you a sell signal, you start thinking, really? Should I sell? Should I sell now? I'm at a loss right now, or I'm making less profit, or I'm stuck. Should I really sell? The indicator says I should sell, but should I? At that point, you're just letting your human nature lead you by the nose again. That's why indicators and technical tools are so useful. They help us overcome our own human tendencies. It's not going to be 100% accurate, but it'll help you avoid risks and seize opportunities about 70% or 80% of the time. It helps you make decisions. You have to understand it that way. It's just like traffic lights. A red light tells you to stop, a green light tells you to go. But honestly, even when the light is green and you're supposed to go, isn't it still possible you might run into someone careless on the road and get sideswiped? It's possible, right? That's just the general direction. Green means go, red means stop, and you follow these rules most of the time. Can you still hit careless drivers? Sure, there's always a small chance things go wrong and you lose money. But as long as you're profitable 80% of the time, you'll see big gains and small losses. You just have to know how to use these tools. Oh, and who is that? Hey, you're welcome. And as for whether I use AI tools to help, no, actually, when I'm using technical indicators, I don't use AI. I really don't use AI for that. Honestly, just looking at the KT indicator and moving averages works really well for me. AI is sometimes more useful when you're compiling or summarizing data. Oh, and someone mentioned ZJZI. Who was that? Yang Lin? Yang Lin asked, with inflation so high, why hasn't there been a crash? Inflation isn't actually that high anymore. Compared to when the trade war started last year and inflation shot up to 5.6%, even 6%, it's much lower now. It's only around 2.9% or 3% these days, so it's not that bad. Inflation's a bit sticky, but it's not out of control. We actually went into a detailed analysis of this earlier when we were talking about the data. That's the situation with inflation today. Why hasn't core PCE spun out of control? Rates rose slightly, but not to an extreme. That's why the market hasn't crashed. Conversely, it means the Fed won't cut rates as aggressively. Now, let's talk about the Dow Jones. It's the Lunar New Year, and tomorrow we welcome the God of Wealth, so I hope everyone makes money. Study these technical tools to ensure your success. The Dow Jones Index fell 0.54% yesterday, but stays above key moving averages in a bullish pattern. The Philadelphia Semiconductor Index dropped 0.5%, but remains okay with its bullish trend intact. See how both lines trend upward? Both the 20 and 50-day moving averages are trending up, meaning the Dow and Philly Semiconductor Index remain bullish. However, the Magnificent 7 dropped 0.18% yesterday. With its 20 and 50-day averages curving down, the Magnificent 7 index looks more bearish short-term. Compared to the Philadelphia Semiconductor Index and the Dow Jones, the Magnificent 7 index is more bearish in the short term. But does that mean it's turned into a long-term bear market? Not really, because on the downside, first, this blue trend line here is still providing support, and below that, the 200-day moving average is also holding up. So from a long-term perspective, it hasn't turned bearish yet, but in the short term, it's relatively weak. That's why you see stocks like Apple, Google, Meta, Amazon, Microsoft, and Tesla haven't been performing well lately, because they're leading the whole Magnificent 7 index. It's bearish for now, but looking ahead, I think that whether it's after the first quarter or even in the second half of this year, we'll still need the Magnificent 7 to serve as a confidence indicator for the whole market. So in the short term, the Magnificent 7 are relatively weak, but the Philadelphia Semiconductor Index and the Dow Jones are still showing a more bullish structure. Today, I'll be covering a lot of things, some educational content, some technical indicators, and a big summary of all the key information from this week. If you're just joining the live stream now, don't worry, you can catch the replay later. Make sure to watch the replay if you missed anything. Of course, as always, I wish everyone financial safety and good fortune in the year of the dragon. Tomorrow is the day to welcome the God of Wealth, and starting next Monday, I'll be here with you all again to watch the markets together. So that's everything about the whole cycle we covered today. Before you leave, remember to like, subscribe, and share for us. Wishing everyone smooth trading, and I'll see you next week. Bye-bye. 1.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.